Hey, this is Richard again with Trade Oracle Group. We're going to do a quick video on swing trading, and the preponderance of my trading is swing trading, and flow is extraordinarily valuable and extraordinarily helpful if you're a swing trader. It works really well for short-term trading. It works really well for longer-term investing. It just so happens that my lifestyle is one now where swing trading is what I prefer to do. So I'm going to share a couple of strategies that I use for you. Interestingly, the basics are still the same. I want to know the general trend of the markets, I want to know the general trend of the sector that I'm trading, and then I want to know the longer term picture for flow. I'm pulling up an example that I traded today and over the past few days this week with Netflix. And Netflix, I start off looking at longer term when I'm a swing trader, right? So I look at Netflix, and over the past week when I first started, it had a bullish uptrend. So the predicted line, this is now green, but earlier in the week, this predicted line was red. And I'll pull that picture up so you can see it a little quicker. So earlier in the week, we were down here, but you could see the amplitude or the angle of attack of the line, which is now green, was red. The blue bands were tightening. That means that flow was getting even more confident that the angle of attack, that the trend was going to be bullish. So I really liked being on the bull side of trades. Now, if you'll go to the next time period down, it was actually in a downtrend. So while we could see this going in an uptrend, we noticed that you also had some short-term things that were trending down over the past few days. So what that meant is that if I am going to trade the long side of this, I'm going to trade on support levels. And I look at support levels two different ways. I want to look at support levels by being on the bottom blue line, but it also means I want to look at support levels on the price chart. So earlier in the week, we had moves where we were at a base and we could trade, and they were continuing to kind of fail a little bit, and you could buy it and hold it and trade for the gaps. But when we got to this point here where it was on the far right side of the blue line, that was actually over here as well. When we were on that side of the line and this was starting to turn up, and we were on the right side of the blue line, we were also, this is the 60-minute and the 30-minute, we're trending up. That was right in here. So swing trading then, as I would buy and trade and sell inside of that space. But when you held overnight, this is really where we got paid. So oftentimes when a trade ends near the evening, on the bottom blue line and the predicted line, which is the red line, is trending upward, I feel good about taking those as an overnight long trade. The only caution that I would give you is right now, for example, is on the 30-minute, and I'm going to pull this chart up so you can see, is you have this little hook at the bottom. In some instances, we call that an Hbomb because there's a high likelihood that at 90% of the pressure going down, 10% retracement, there's a really good chance it's going to take another leg down. And if that leg down is big, and the general trend is down, it could be a big move. So in that instance, I probably would not take it overnight based on that trade itself. The 60-minute, however, has kind of a swooping bottom. That looks more like it will rally back. So the 60-minute gives me more confidence. So those are a little bit contradictory. So let's go to the shorter term time frames. On the 5-minute and the 30-minute, we're well up the upward trend, and we have multiple tiers of upward movement. So for scalping, this is actually a pretty solid weekend trade. If it comes in over the weekend, I would buy more. So it tells me two things. One is I would not trade. If I'm normally trading a 10 lot, I would trade 5. And then if it comes in at the open, I would add another 5 lots to it because it would come down probably into the support level and then scream upward. That's how you can use flow to tell you if you're in the right direction on a little bit longer term. If I was trading for just around the open, you're going to get a lot of volatility and you don't really know where it's going to be right now. But I do know with fair confidence that come Monday, you're going to have a generally upward trending movement. So I trade inside of this. It's at a resistance level, so I actually consider that it's probably going to gap back in a little bit. I'll buy more. I would also look perhaps to buy at the open and hold it throughout the day, buying it, selling it, buying it, selling it. If you're more of a swing trader or scalper, shorter, moving towards scalper. But here, I'm looking for the next several days for this to trend up. I've got several days on the calendar on the 60-minute. 720, 722, so I'm looking for 2-3 days. If this trends in the same way, it'll probably rally back this way. So I've got 2, 3, maybe 4 days where it's going to move up, and I have a fairly high confidence interval for that. When we find stocks that have multiple moons in alignment, upward trend, upward trend, upward trend, it gives you the confidence to trade better. This is something you only get with flow, and it's something that will increase the size of your winners, and it'll keep you out of trades that are losers. Here I know that if I'm trading for a swing trade over the weekend, to trade smaller, but I still may want to take this as a bullish trade. That's one good example. We'll do more in some future videos.
Flow by Trade Oracle Group.